Hello everyone. Please pause and have a look. This is the credit and deposit growth of Indian banking sector. As we see here, 3-4 months ago, banks credit growth was around 20%. That at present dropped to below 15%, exactly near 13%. The more credit growth, the more banks make money. Please don't mistake me. Deposit growth rate is also important, but comparatively, credit growth rate is more important. This slowdown of the banking credit growth is one of the present major issue. For that, yesterday, Indian government pushed back the RBI. So, in this video, first let's discuss those in detail and then we can discuss our regular pre-market report for today, 19th November 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Before starting, please pardon me, I'm not feeling well, so my voice may not be good. Anyway, coming to the topic, let's understand the issue first. Almost for 2 long years, banks' deposit rate was low. The difference was approximately 7%. Though the deposit was low, Indian banks were managing it through issuing the bond and raising the money by some other means. To some extent, which is okay since almost all the banks in the world do that same. However, being conservative in a good manner, RBI started to restrict the banks' lending, like they have to allocate 5% of their capital aside as provision for the loans that they issue for infrastructure spending. In addition, banks has to keep large amount aside for the runoff deposit withdrawal, etc., which all successfully calmed down banking sector credit growth. Regarding those, yesterday, Finance Ministry pushed back RBI for those regulations. Like now, government requesting the RBI to change the rule case by case approach rather than broad provision allocation. For example, they said for high risk real estate project, 5% provision is okay, but the same is not required for solar or other renewable projects. Similarly, for the runoff deposit, they should have mandated the provision only on certain categories like where they might see heavy withdrawals rather not to implement across the board. Basically, Indian government wants the credit growth back to 20%. Above all, very important, now our Finance Minister Nirmala Sitharaman also recommending RBI to cut the interest rate. Only in the last video we discussed this. During weekend, already Commerce Minister Piyush Goyal recommended the RBI to cut the interest rate. Now, yesterday in an event, our Finance Minister also echoing the same. As far as I know, the present RBI governor in most of the time they favor the government. So most probably on December 6th, we can expect 25 basis point rate cut. Please note, the present RBI governor's tenure is expiring on December 10th and as per news website, it looks like Indian government is going to extend his tenure. Anyway, the takeaway point is government is pushing back the RBI to relax the credit rules and also recommending to perform the rate cut. Will RBI do the rate cut in the upcoming MPC meeting? Only time has to tell. In addition to all, Indian government revises the norms for dividend payout and shares buyback for the public sector companies. Like for example, except for government owned banks and insurance companies, all other straight run government companies have to pay a dividend of 30% of profits or 4% of net worth, whichever is higher. Second, for those companies whose share price is less than its book value for the past 6 months, have a net worth of 3,000 crore rupees and a cash balance of 1,500 crore rupees means they have been asked to consider shares buyback. So today we can expect market to react for this new public sector companies norms as well as for this finance ministry suggestion. Now coming to regular stuff, last night in US there was no major macro scheduled release. So based on the stock performance, US market closed mixed. Most tech stocks increased whereas Dow Jones was dragged down by material stocks. Thus in the end, Dow Jones alone decreased marginal 0.13%, S&P 500 increased 0.39% and Nasdaq up by 0.6%. In case of US VIX, it decreased near 3.5% and moved near 15.5. Here, like to highlight one thing, major AI tech stocks, Google, Microsoft, Netflix, Tesla and Facebook, all those 4 increased over 1%. However, Nvidia stock dropped 1% because its quarterly results due on Wednesday night. Moving on, in case of oil, this Russia-Ukraine conflict escalation made the oil to increase 3%. At the time of this video, Brent crude is trading around $69 per barrel and WTI crude traded at $73 per barrel. Then regarding Indian ADR, except Wipro, all of them closed to positive, and also if we calculate the arbitrage, all of them indicating the flat to positive. So for now, both banking and IT stocks looks somewhat okay. However, for some reason, Reliance GDR closed to negative, and in arbitrage also, it's an indication of negative opening. Then in GIFT Nifty also, the story is the same. Today early morning it closed at 23,537. Yesterday the premium was just 50 points, equating it with the spot market, indicating the gap up opening of 20 to 30 points. Apart from this, yesterday also in the cash market for the 35th session, FI was net sellers, but looks like they reduced their selling size. I mean, before 4 to 5 sessions, every session they net sold for over 4,000 crore rupees. But yesterday they net sold only for 1,400 crore rupees. Not just yesterday, even on the last 3-4 trading sessions, their selling size reduced to around 2,000 crore rupees. As a summary, US market bounced back and particularly tech stocks closed positive. So at present, GIFT Nifty and Indian ADR all indicating a mild positive. Here, please note, tomorrow Maharashtra election holiday and tomorrow evening we can expect the Maharashtra election exit poll results. So today we can expect market to react for that as well. Moving on, as per stock open interest, Deepak Nitrite, Glenmark, Emphasis, HDFC AMC, Bajaj Finserv and SRF got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, National Aluminium, RBL Bank, Ashok Leyland, Dauber, Marico and UBL got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, during our market hours at 12:30 p.m., some European countries like Italy, Germany and French car registration data is scheduled release. Here, that macro data will give direct clue about the state of the economy. Then in the aftermarket hours, Europe's consumer inflation is due, and for US, some housing related macro are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 70 points gap up at 23,600 but could not sustain, and for most part of the day it traded lower and also closed below 23,500. Thus on the daily chart, Nifty formed a bearish candlestick pattern with some lower shadow. And in addition, now for the 2 days in a row, Nifty had been trading below 200-day moving average. Hence, until Nifty climbs and sustains above this key moving average like 200-day and 100-day, the trend is likely to remain weak. However, now RSI daily momentum indicator entered the oversold zone, and the positive thing is the selling pressure appears to have reduced now. So in the short term, Nifty might recover towards 23,700 to 23,800 range. On the downside, the support is at 23,200 to 23,300. In case of Bank Nifty, it opened 130 points gap up and outperformed Nifty by remaining higher for another session, then closed at near 50,360. Thus on the daily chart, Bank Nifty formed a doji candlestick pattern, though not a classical one. I mean, technically Bank Nifty remained within the range of last Wednesday and consistently defended the 200-day exponential moving average 49,910 for the third consecutive session, which is a positive sign. However, the momentum indicator MACD is still indicating a bearish trend in the short term. Meanwhile, RSI indicator also below 50 mark on both daily and weekly charts, all signaling weakness. Hence, if Bank Nifty sustains above 50,600, the relief rally could extend to 15,000 level. Overall, the short term trend is down, but as long as Bank Nifty holds above 14,900, a pullback rally is possible. On the weekly options data, the maximum call option open interest was at 24,000 strike, followed by 24,500 and 23,500, with maximum new call option rating at 24,000 strike, and then 23,500 and 23,700. On the put side, the maximum open interest was at 22,500 strike, followed by 23,000 and 23,500, with maximum new put option rating at 23,200 strike, and then 22,500 and 23,000. Thus, from options data, Nifty might find support at 23,200 to 23,000 level, while resistance is expected at 23,500 to 23,700 level. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI research advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.